Hey guys, welcome back. This week I want to share with you a couple of pairs where we were doing our analysis in the London live room this week, which could provide a trading opportunity going into next week. So it's something for you to keep an eye on during the open. It also gives you the chance, you guys who don't know what the London live room's about, to come and have a look at what we do in there each day. We drill down and get very detailed on the analysis and really try to build out that optimum trading opportunity. Now, if those trading opportunities don't present themselves, well then we simply sit on our hands and we don't get involved. So it's a demonstration that trading isn't always about being in a trade. It's about waiting for those opportunities to meet your trading rules before you can enter the trade. So sit back, enjoy the analysis, and I'll talk to you shortly. Okay, so we're looking at pound yen on the daily. We came down and we tested. We found support here. We retraced up. Where did we retrace up into? Look left, structure leaves clues. Previous structure, support. Previous structure support should become resistance. We were bearish pretty much from this point here. Okay, we were always looking for bearish opportunities, completely bearish bias. And then yesterday was down at this decision point, which I called it a decision point. Okay. Now, if this candle closes below this level here, or we break and close below, if you look left here, we were looking at this level here, weren't we? Previous level support. And I said yesterday that if we break and close below this level, well then the next level of structure is down here at this resistance level. Right? Down here. This structure level here. And there was potentially 300 pips, a 300 pip move here. Now, I was hoping for a pullback and then look to get short. But as you can see, market has just, we always go through this process. We always say how it's identify, predict, decide, execute, right? We predict where the market's likely to go and how it's likely to get there. So it's either going to go straight down or it's going to pull back and then go straight down, right? That's our prediction. And that's what we do every single day. That's what we just did on the euro dollar. And that's how I'll approach the market every time. But as you can see, market's gone straight down to this level here. Okay, and taken off without us. So we're now at a level of previous structure where we could expect some sort of reaction, retracement. Okay, counter trend traders might be looking to get involved at this level here. Now, what I'll be looking for is a pullback up into this structure level here. Previous support, okay, because it was tested once, tested twice. It held a third time here. See that? Held a third time and then we broke down. So if we pull up into this level again, what should this become? Resistance, exactly. And where will I look to take targets? Previous support. Let's drop down to the 240 and we'll see this a bit clearer. So what we're looking at is a break and close below this support level. What I would wait for, we know we've pulled down into the resistance level that we're looking at here, which should now become, we might see a bit of a reaction. But what I'll be looking for now, just to make it absolutely clear, is a pullback up into this area here. We know that this support level was tested previously. It was also tested here. It was also tested here, and it also held here. Then we broke down. I'll be looking for a pullback up into this level, and then I'll be looking to get short here. Okay? For a retest of structure support, wherever this candle might finish. So that's what I'm looking at, guys, right? So what do we do until then? This is what dumb money do. They see this move here, and they get involved here. Okay? And where do you think their stops go? They get excited by this move. And they go, oh, look at this move. Yeah, we're moving, let's get involved. Let's get involved. Where do their stops need to go? Anyone? Targets? Where do targets go? Are you going to put stops here? Right? Are you just going to make up a stop level and then get shaken out the market by the smart money? You've got no idea. And how can you possibly be consistent doing that? But that's what they do. That's what most retail investors come in and they just gamble. They see this move, they enter halfway through the move, right? Then every single time they'll see this happen, see this candle here, and they'll go, no, let's get out. They'll place a stop placement somewhere, you know, even if it's above this structure high. And what they'll do is they'll see a candle like this and go, oh no, let's you know, it's reversing, let's take our profits. And they'll take this much profit. Trust me, guys, I used to do this. But what had happened is if market reversed here and started going against them, they'd leave their stop here because they'd think that market's going to turn around. And what will happen is, bang, they've taken this much loss. Now, how many times have you got to do this sort of setup to wipe out your account? We shouldn't be in a rush. We sit on our hands. This is the point I'm trying to make. Okay? We know what we're waiting for. We're waiting for a pullback. Okay? And then we're looking to get short. Right. Now, there is a counter trend trading opportunity down here because we're going to look at a counter trend move now. Okay. We are at, let me just draw this out. So we're looking at this level down here. Let's really hone in on this. Okay, so we've actually got previous structure resistance here at 160 flat. It's an even handle number, right? This is what we predicted, right, guys? We're going to find resistance at 160. We said this yesterday. Okay, so we drop down to the 4 hour. And you can see that we're still in this candle. This candle'll still be open for a little while, but we've come down and we've tested the 160 flat. Look at that. Before bouncing back, let's get rid of some of these so you can see. And we've come down to test that level. Now, if we drop down to the trading time frame, or 60 minute, most of you trade off of 60 minute. Look at the RSI. Massively oversold, down at 6.5 or 7. Look at the candles. Now, if we bring on a Fibonacci extension, we've got a 1618 down here. What else? Harmonic move in that zone. We've effectively got a counter trend kill zone area around here, right? Previous structure, which it happens to be an even handled number. We've got a harmonic move coming down at 16134, a 1618 in that area, and we've got these nice low test candle wicks here. If we drop down to the lower time frame, this is where you might want to look for a double bottom. Now you can see we've had the initial test here. This is the low. This is the initial test. What we'll be looking for is a retracement, a retest, a valid double bottom, okay, which will test the lows of this initial test, but not close below the low of the initial test. Does that make sense? I want everyone to stay with me on this one, because if this one plays out, then it'll be great, great training. Okay, so we wait. We wait for a retest the structure, see what happens at this level. If we can get confirmation in this level of a potential reversal, well then we can look to take, you know, get long. Okay. And look to take targets at the 382. Conventional double bottom targets. Sorry about my voice. It's Terrible. And up at the 618, which just so happens to line up with, you say it. Roy says, I'm getting it, Jason. Great work, yeah. Roy, the great thing about this room, that is it. You come in, I said at the beginning of the room, anyone that missed it, I said, you know, you heard the phrase, give a man a fish, he can eat for the day, teach him how to fish, and he can provide for his family for life. And that is what you're doing in this room. You're coming in and learning everything you need to know of what it takes to become independently, consistently profitable. And by independently, I mean you're not just coming in and copying me, you're seeing the process that I go through in order to be consistent and disciplined. So you can then just transfer that over into your own trading. So I'm effectively letting my skill rub off onto anyone who's willing to put in the work and come in here every day and you know, invest in themselves. That's it. There's no hidden agenda. There's no other after sales that we're going to try and flog you. This room is, you know, awesome value for money. Okay, so we bring on the ATR. And we look at this candle here. You can see the ATR is 80. Quite big. And then you weigh up your risk reward. So you're going to be down at 159. Right? So 159. Depending on where you enter. It's great to be this ahead of the market. Okay. And now you can see that if we enter here, right, more than a 1-to-1. So that's what we're looking at here, okay? That is what we're looking at. So we either take this counter trend trading opportunity or we just wait for market to pull up. You know, we might miss this. It might not meet our rules, but guess what? Who cares? Because we're waiting for this pullback, right? Went down to 15 and I said, if we get a double bottom here, we can look to enter this if we get a valid double bottom. And what we can do is look to ride up to the 382 and the 618 for target 2s. Now, what we did is we put in this perfect, I think we drew it out exactly how it looked. I think we drew something like this as a prediction. I did post it on Twitter, the before and after, but I think we predicted something like this, and then price action almost followed the blue line. So it's cool when that happens. But we did put in a valid double bottom. And it would have been a very pain-free, you know, you would have entered here. You would have entered at 160.50s, 51s, and you would have hit targets within 5 minutes, 10 minutes. And that would have given you 226 pips in 5 or 10 minutes. So guys, going back to what we're looking at here, we're bearish, right? We identified this potential counter trend move down here, but we are bearish. We've broken close below structure. Right, we've broken close below structure and we've pulled back slightly. Where have we pulled back into? Well, where's the best opportunity to get involved in a short now? Okay, we're waiting for that pullback. Now, if we bring on our Fibonacci Retracement tool, we've got a 618 previous structure. Look at that. We bring on a Fibonacci Retracement from the highest high to the low. And we've got a 382. Remember, guys, we're building out a zone. We're building out the most likely zone where all the other traders are thinking of getting, of selling this market. Okay. So we've got a 382. We've got a 618. Okay, let's drop down to the 60. Now, what else can we do at this level? Any ideas? A, B, C, D. Yeah, harmonic move, right? Harmonic move. So A, B, C, D. Look at that. Got a harmonic move right in the center of that zone. We've got Fibonacci Extension. We can bring on our Fibonacci Extension tool. Swing low to swing high and back down. We've got a 1618 up here. We've got a 1414 right on that ABCD there. Okay. We can also bring on Fibonacci Inversion, where we've also got a 1618. Okay, so we're narrowing down this kill zone, right? narrowing down this kill zone. So we've got previous structure looking left. Previous structure looking left. We've got a harmonic move, ABCD. We've got a Fibonacci 382 retracement, a little bit higher, but we've got a 1618 retracement, a 618 retracement. We've got a 1618 Fibonacci inversion. We've got a 1414 Fibonacci extension. Okay, so if we push up into this area, what do I look for then? RSI overbought. Isaiah, yes. Jonathan says, I'd like to see RSI going overbought. Yeah, exactly. How simple are these rules? How robotic is it becoming? It's like, this is telling me when to enter the trade. It's not the other way around. This is my plan is telling me when I can enter this trade. And if we don't get up to that level, and we don't find another reason for it to get short, then I'm not getting short. If we don't find another reason that meets my rules, I'm not getting short this pair. And I don't lose money. I don't get involved in the trade, but I don't lose money. I know that if I get involved and it does meet my rules, I know I've got a high probability of being right if I do the same thing over and over again. Okay? So this is the area we're paying attention to. Remember this area. This will be something to pay attention to going into next week. We might see something later on today. I don't really want to get involved in a trade, but you can see that this is a good trading opportunity, right? Let's go to euro dollar. On the daily, we've got this big bat pattern. Anyone trade the dailies in here? No. Okay, well we're up at this bat pattern completion. Those who do probably entered yesterday if you front run your pips, front run your orders by, I don't know, what is it, 10 pips or something. I still think we can test these highs. Okay, so I still think we can push up to this one, even the 1500 flat, 1500 even handle. So I'm bullish. IPDE. We do the same analysis again. If we pull back, where is the optimum area to get involved in buying the market up? Well, let's go through the process. Let's bring in Fibonacci retracement. Okay. We know we've got a 618 down here. We know that's been respected before. We've got previous structure support here. Okay. That's the first thing you want to pay attention to. So really, our kill zone, our kill zone is effectively here, isn't it? Somewhere down here. We just want to narrow that down as best we can. So, I'll wait for price action to come down into this zone. We might find that we get a harmonic move down here. RSI might go oversold down here. Okay, and then when price action gets down to this level, that's when we can really filter down and use our analysis and narrow down that kill zone for optimum entry. The 1200 even handle down here as well. That's a price to pay attention to. But until market pushes down there, that's it. I won't be looking to do anything until we get down into this zone. Exactly what we did here. Exactly what we did here. Okay, and until then, I don't do anything, and that's another trading opportunity we might look to going into next week. Then we break out and we push down. Now we're at previous structure resistance now, so yeah, effectively the kill zone is this, but price action doesn't always do that. Price action doesn't always just come down to previous structure resistance and become support. Okay. That's why we build out this kill zone. Effectively, this kill zone here is still an outside return. So as long as we don't close below this low of the outside return, then we're still in an outside return and we can look to get long anywhere in this area. Now, the idea of building out the kill zone is to find that optimum area where market's likely to react. We've got to think like the other traders. What are they looking at? What are they looking at? So harmonic moves, Fibonacci retracements, extensions. Do we have any confluence there? Is there any even handle numbers lining up with that confluence? Do we have other previous structure levels that have been respected in the past? I mean, look at this. See that? See that? See that? Right? All down this level here. Think this would be a good level down here? 1200 flat. Okay guys, so I just wanted to update you on the euro dollar. You can see that we identified this area down here, and we was drawing out our kill zone down here, and you can see that price action's moving down here. So now we can get a bit more serious and try to drill down where we're looking for price action to come to. You know, we had our harmonic move down here. Okay, we've also got Fibonacci extension, swing high to swing low. We've got a 618 down there as well. So let's get that off of there. We have a 618 down there as well. And if we bring on our Fibonacci retracement tool, you're going to see that we've got a 618 lining up with previous structure and also in that zone. So this is a good area to pay attention to for anyone who's looking to get long. I think that we can see market going into next week. I think that we want to pay attention to a potential long opportunity in this zone. I'm just going to wait for RSI to go oversold and then see what happens then. Okay guys, so that's it. I hope you enjoyed the analysis. That's really what the London Live Room's all about. You get to come in and you get to watch us break down the pairs in my portfolio. We go through the dailies right down to the 5-minute charts and doing the same analysis every time we approach the markets. That way it allows you to become consistent, and it also allows you to trade your plan with discipline. So hopefully you found that very useful. And if you're looking to come in for a free week, well then just go over to www.tradingpowered.co.uk and you can come in and watch us for free. It won't cost you a penny, but you can really see the value that you get in that room just by being there every day. So that's it guys. Look out for those pairs on the open, and good luck in your trading this week. I'll talk to you soon.